Financial Management, Institutions and Instruments in Financial Markets MCQ. Assets Management Company is formed to manage mutual fund investments. Prime duty of a merchant banker is working as a capital market intermediary. Basic objective of a money market mutual fund is investment in short term securities. Short selling refers to selling shares without owning them. Which of the following is not regulated by SEBI? Foreign direct investment. Which of the following is true for mutual funds in India? Exit load allowed in some cases. Which of the following is not available in India? Commodity options. Which of the following is the benefit of depositories? Reduction in the share transfer time to the buyer, reduced risk of stolen, fake, forged shares, no stamp duty on transfer of shares in dematerialized form. All of the above. Credit rating of a debt security is merely opinion. The first computerized online stock exchange in India was OTCI, Over the Counter Exchange of India. Which of the following derivative is not traded on Indian stock market? Forward rate agreements. How many depositories are there in India? 2. Secondary market in India is regulated by SEBI, Securities and Exchange Board of India. Dash funds do not have a fixed rate of redemption, open-ended funds. In India, Nifty and Sensex are calculated on the basis of free float capitalization. The type of collateral security used for short-term loan is stock of good. Which of the following is a liability of a bank? Certificate of deposits. Commercial paper is a type of unsecured short-term debt. Which of the following is not a spontaneous source of short-term funds? Provision for dividend. In India, commercial papers are issued as per guidelines issued by Reserve Bank of India. Commercial paper are generally issued at a prices less than face value. Which of the following is not applicable to commercial paper? None of the above. Which of the following forms of equity financing is especially designed for funding high risk and high reward projects? Venture capital. Beta of a security measures its market risk. Corporate financing instruments which have an unlimited life, voting right, and right to receive dividends are known as equity shares. Which of the following securities is not a part of money market? 5-year public deposit. The aim of foreign exchange risk management is to know with certainty the quantum of future cash flows. A company is planning to issue a discount bond with a par value of rupees 1000, implicit interest rate of 11.5%, and a redemption period of 5 years. The company also intends to offer an early bird incentive of 1.5%. The issue price will be 572. Present value factor எடுத்தோம் அப்படின்னா 1000 into 0.5803, பட் 1.5% இன்சென்டிவ்னால into 98.5% போட்டிங்கன்னா 571.60 வருது. ரவுண்ட் ஆஃப் பண்ணோம்னா 572. Exchange rate system where the central bank intervenes to smoothen out exchange rate fluctuations is known as managed float. Money market hedge involves borrowing in foreign currency in case of exports, investing in foreign currency in case of imports, both A and B. Euro dollar deposit means dollar deposit beyond the control of monetary authority. A company issue commercial paper for rupees 3 crores with a maturity period of 90 days. The interest rate is 11% per annum. The net amount received by the company will be 2.92 crores. So 3 crore into 0.11 into 90 by 365 போட்டோம்னா 0.08137 வருது. 3 crore இருந்து இன்ட்ரெஸ்ட் அமௌண்ட்டை மைனஸ் பண்ணோம்னா 2.91863, ரவுண்ட் ஆஃப் பண்ணால் 2.92 crores. Global depository receipts are issued to non-resident investors against publicly traded shares of the issuing companies and denominated in US dollars. RBI sold a 91 days T-bill of face value of rupees 100 at an yield of 7%. What was the issue price? 98.28. Formula பார்த்தோம்னா yield is equal to 100 minus P divided by P into 365 by 91. சிம்பிளிஃபை பண்ணோன்னா ஆன்சர் 98.28 வரும். The face value of a 364-day T-bill is rupees 100. If the purchase price is rupees 86, then the yield on such a bill is 16.32%. Same formula. Yield is equal to 100 minus P divided by P into 365 divided by M. Preference shares must be redeemed within a period of 20 years from the date of issue. Infrastructure company 30 years. 21st year every year 10% redeem பண்ணும். From the enumerated list, please select the instrument which is not dealt in capital market. Commercial paper. From the enumerated list, please select the instrument which is not dealt in money market. Equity shares. If the RBI intends to reduce the supply of money as part of an anti-inflation policy, it might increase cash reserve ratio. The maturity period of commercial paper usually ranges from 90 days to 360 days. Which of the following is not a characteristics of GDR? Shares underlying the GDR carry voting rights. SPO refers to secondary public offering, the second and the subsequent time a company raises money from the public directly.